Let's move on. Let's talk to now the management of. We've got Five-Star Business Finance joining in on the show right now. Let's talk to them about, what really is happening with the business, what's the opportunity in secured as well as small loans, and what is the potential of scalability really. We've got with us Lakshmipathy Deenadayalan joining in on the show right now. He's, of course, the CMD of the company. Mr. Lakshmipathy, great to have you today on ET Now. Just wanted to understand the market opportunity in this particular segment that you cater to is huge. There's no denying that. And we've seen your own AUM grow strength by strength over the last few years. Do you see a long runway for growth ahead? And will you be able to sustain an AUM growth of, say, over 30% even in the years to come?
First of all, thank you for having me in this show. I'm happy to come again in ET Now and explain to the viewers about the specialization of Five-Star in lending to the unlent segment of this country for the last 20 years. Yes, absolutely, you're right. We have a bright and a very, very long runway. Because this segment has not been, that credit need of the segment has not been met by the banks and bigger NBFCs. So we find a lot of opportunity going deeper into the existing geography where we have strong presence and getting to the newer geographies where we have not yet put our footprints. Taking this long runway and created one of the best execution team to cater this model, I think we may revise the guidance from 30% to 35% for next 3 years.
Interesting. What is your own sense on how the demand is on ground? And especially if I could talk about how you're likely to see the credit demand shape up for the next few quarters.
See, the demand, I was speaking to your channel some time back, so I emphasized this point. The first port of credit for the customers whom we serve, single small shopkeepers and self-employed in tier 3 to tier 7 towns, was being catered by the local money lending community. So the demand was always there. Pre-COVID, during COVID, and it will be there, the strong demand will be there years to come. So it is a player who can go and tap this market successfully. From Five-Star perspective, we always have approach of collection first. This is not a growth first business model because growth is very easy for a lender, but it is very difficult to collect it back and maintain the asset quality consistently at the best levels, differentiates you from others. So, as I said in the earlier question, the credit demand is always there and we'll be catering to these customers as we move on.
That's exactly my question, right? Given the industry, it's always the biggest headwind with respect to how you're able to maintain the asset quality. You're talking about how collections continue to be quite strong, but if you could give us some guidance in terms of how the asset quality is likely to pan out, the asset ratios, etc. Any indication for FY24?
Before giving my guidance for FY24, let's understand the basis of Five-Star. The business lending model of Five-Star is born from the collection first. So this is not a business first model, it's a collection first, then comes your underwriting, third comes your growth. Because growth is always there for lender in the country of our size, and people have not come to the formal credit side. So you have always a big opportunity whenever you want to start lending. But Five-Star has clearly defined itself as collection first NBFC during good times and during bad times. So our asset quality was always best, not recently, for last 15, 20 years. Whatever the NPA classification was described by RBI, that it be 180 days or 90 days or the recent change in NPA categorization, Five-Star's asset quality remains always strong. So our guidance to the market is the credit cost for financial year 24 also will be at close to 1 to 1.25%. So we will maintain the best asset quality even coming years. We don't see any a threat because inflation is under control and the rates are almost stabilized. We strongly believe there will not be any rate hike, but we also believe the rate dropping down will take its own time, depending upon what RBI thinks. So we see a very strong cash flow in the hands of the customer that will reflect in our asset quality as the years goes.
Since you talked about the RBI, action going forward, of course, the decision will come out tomorrow for the RBI MPC meeting. What's your own base case expectation of have we peaked out when it comes to interest rate? What's the impact you're expecting on the microfinance industry for your own business?
My expectation comes from the report, what I read and hear from the channels like you, where most of the people say the rate hike pause, which was given in last time, will continue. But whether the rate down cycle will start immediately, I think we don't have any clues on that. The best case scenario says is it may be the December of this financial year or the first quarter or the last quarter of this financial year. We can expect some decent rate drop from regulator if the inflation and the macro economy is better.
Okay, just wanted to also get in your outlook then as to the plans to expand to the non-southern states as well, given that that demographics vary very differently in different geographies. Do you think that you can see the same success that you saw in the south in some of the other geographies as well? Is there any plan on the cards?
Yes, I completely agree the statement what you said. The demography difference is always there. Even within South, all the 5 states are not equal. Every state has own characteristic, cash flow, and legal or property nuances. So you have to learn that. Having said that, we are now strongly present in South, not deeply present. We expect to open 50 to 60 branches year on year for next 5 years in South alone. So the market has such a huge potential in the existing South. Having said this, our non-South plans are very strong. So you will see a lot of activities getting into newer states and deepening our presence in the states where we presence stronger presence in non-South like MP, MH, Chhattisgarh, and newer geographies like Rajasthan, Gujarat will definitely take place in coming years. So we expect to be a quite good presence in non-South in next 3 years.
Thank you so much for taking time out and joining in and giving us a view on how business is shaping up. That's the management of 5-Star Business talking about how they are looking at a collection first model. That's the approach. Credit costs will be between 1 to 1.25% for FY24.